Hello everyone, Okane here. I'm going to show you a simple strategy. It's only using two indicators and they are fairly easy to understand. So the first one is an SMA 50, moving average 50, and you can find it here. Indicators, trend, moving average, and choose smoothed and type in period 50. Now the second indicator is the stochastic oscillator. You can also find it under the oscillators. There it is. Keep the standard settings. You can set the levels 20, 80. These are the levels here. Overbought and oversold. So the first thing we're gonna do is to go to the M15 time frame and look for the trend. Now the SMA will help you find the trend. In this case the candles are closing above the SMA, so we can immediately see that the trend is a bullish trend, it's upgoing. So we want to find an entry. What you do is to look for a touch when candles come down and make a higher low, which means this low is higher than the previous one, hence the trend is going up. So in this case you have identified that this candle came down all the way, touched the SMA and even bounced and closed above. So you could have entered after this candle closed, because you would confirm it with the stochastic oscillator and you would see that it's almost hitting the 20 level here. In this case it's about 23, but that's okay. So you could have entered for 15 minutes or 30 minutes. It's much safer to go 30 minutes. You can also go 20, 25, it depends on your broker. But as you can see, on this location, price was oversold higher up than the previous low, which was oversold lower. So this is a good entry. Then the next call option would come here, because again a candle came down and touched the SMA, almost touched the SMA, but the second one did touch the SMA. So you could have waited, you could have entered here, but you could have waited for the next candle to touch, and as you can see it would confirm it with the stochastic and you would see it's an oversold position, so you would enter for about 30 minutes. Now we can do the same thing when we want to take a put option instead. So in this case you can see the uptrend ended here and the price broke and came down under the SMA 50. So now the trend is considered to be a bearish trend. In this case our first put would be here, because price came back, it retraced up, made a lower high than the previous low here, touched the SMA and price was overbought. We would confirm with the stochastic and we would enter for about 30 minutes. You could wait for the candle to close before you enter. It's safest, but you would lose a little bit of leverage here, so you should be careful. You could check with the M5 time frame to see if the price is starting to go down and start the trade there instead. So let's go and take a look at the next one. I will show you what I mean in a moment. Now the next put would be here, not here, because as you can see price continued up. So this low, this lower high is lower than the previous one, so this is a valid point. Price touched and broke the SMA, so you could wait and let price start to come back under the SMA before you enter. But even though if you would have entered after this candle for 30 minutes, you would have won. Again, you would confirm with the stochastic. So what I mean with scrolling down to a lower time frame, in this case you would go to the M5 and you would locate the position where you would want to enter. It should be around here. Yes, so you could have waited here and you could have observed the M5 candles, and you would enter when you would see bearish M5 candles closing white like this. So you could have entered after this one or after this one for about 30-20 minutes. So that's how you do it. Now I will be starting a thread at binaryoptions.net about this strategy, and we can discuss any questions that you have in that thread. So I will see you there.